What's up, people? Welcome on the channel. My name is Clifford Mulauzi, and into this video, I'm going to be breaking down some of the Forex pairs as we're getting ready for the week. So I'm going to be looking at a number of pairs, but mainly I'll look at US30, Gbpusd, and gold, and I'm also going to analyze the DXY pair or the DXY index to have a very clear picture of where the market might be pushing towards. So be sure to subscribe to my YouTube channel, like this video, and drop a comment. Let me know what you think about this video, and let me know what pairs are you looking at, and also let me know what you think about the bias of how the market is gonna move. Otherwise, if you're ready with the pen and paper, let's get started. So every time whenever I want to analyze the market, I don't just come and then open a particular pair and start analyzing, but the first thing that I do, I go straight to DXY index. DXY is simply a dollar index. So what is a dollar index? A dollar index is actually an indicator, I should say, or a performance indicator, simply put it, that actually measures the performance of a dollar. So this DXY, if I go on a daily, let me go on a daily so that I can actually show you what it really means to measure the performance of the dollar. So when we are on a daily, it's simply showing us how the dollar is particularly performing on the market. So you can actually see that moving backwards, the dollar has been pushing down and kept on pushing down. And now the dollar started pushing up and it pushed down, it pushed up, it pushed down. And right now the dollar is trading around these areas, which is 102. So the question should be, is this area where the market is, where the dollar is trading, is it a new place or is it a new area? What do I mean when you say new area? New area, I mean when I say, let's say the dollar is trading around these areas. These are new areas. Like for example, these are new areas, but areas that are within these areas are not new. But this one might be particularly new after a long time, like since 2022, the market had traded in this area for the first time. And then after like a long time, market also traded in this after a long time. And then we're seeing the market is also trading this here after a long time. But is this area a new area? The answer is no, which means this is simply telling us that the market is simply in the liquidity zone, or the dollar is simply in the phase where it's being indecisive on where to go, whether to keep pushing up or keep pushing down. As you can see right now, we're just coming from an impulse that actually dropped right here. And on this impulse, we see the market accumulating, that the market has been creating a series of highs and lows, which means something's telling us by the end of the year, the market is likely to continue growing, continue dropping down all the way to this level. So if you're watching this video after a year, just go check DXY and let me know what has actually happened right now. I'm gonna be able to see your comment. But also potentially we could see the market pushing to the upside. But where we are going, guys, I'm telling you, where we are going, where the world is going, I'm actually seeing the dollar weakening every single day. Why? It's because of a lot of factors, like we're having elections that are coming. We're also seeing a number of things that are coming globally, including the BRICS, the issue about the BRICS. Very soon that thing is gonna like come up and then it's gonna kill the dollar, and we're gonna see the dollar gradually keep on going down. But that's not a story for today. Today we're gonna just be looking at what should we expect for the week. So what should we expect for the week right now? That's the biggest question for today. The rest wasn't really necessary for you for me to explain, but for the sake of knowledge, for the sake of intel, it's just like something that is very important to know as a trader. So right now, you can actually see, let's just come from this area whereby we're having market right here. The market traded push to the downside, and when the market pushed to the downside, we're seeing liquidity was taken out, and then the market also went up here to take out the liquidity that was resting above these highs, and then the market came down. We call that the market pushed down in the mitigation zone. And if all these things that I'm teaching you guys are new, you should probably revisit some of my YouTube videos that I've actually taught these things in detail, and you should be able to follow up what these things are. So like you can see, the market has pushed down, and then also the market also went back. So we can say two things are involved. If the market also went up in these areas, we could potentially say that the market also went on mitigation, and the market also came here for mitigation. So we can say that in the supply zone, the market came for mitigation. There was a mitigation that happened right there. If you don't know what mitigation, you can actually also find out from our previous videos. But I'll just give you like a quick explanation what mitigations is. Mitigation is whereby the banks are just trying to prevent them losses or yeah, it's just a practice of preventing losses or wins. This is more especially popular amongst the smart money traders. They know exactly what is happening. So if you'd like to know these things, just check my previous videos and follow up what these things are. So right now you can see that the market actually came here for mitigation, and then after the mitigation, the market went down. Okay, let's see. But before the mitigation, we're seeing the price that it actually came and traded above these areas. So these are always my areas of liquidity. Whenever I'm seeing these areas, I'm excited because I know that anytime the market is going to reverse. So this is like price just came, took out all the liquidity that was resting above here, came in this area of mitigation, which is also known as a supply zone. And then after that, the market went down. As the market went down, we're actually seeing a change of character, okay, or change of market behavior, whereby market came down and then we're seeing a break of structure that actually, or change of character that is actually telling us that no, the market is interested to keep on pushing down. So as a result, we're seeing this whereby market just pushed down. Okay, so just to explain something that really does make sense, I'll just say this is what is happening. Let's just go on a replay. Okay. All right, when we go on a replay, as traders, let's say this is our supply zone, right? We want to see, we want to see the market coming in this area, right? So as the market comes in that area, now the price has traded in this area. What is the next thing that we need to see? We go on a smaller time frame. I'll just go like on a 4-hour time frame. Yeah, we go on a 4-hour time frame. So when we go on a 4-hour time frame, what is the next thing that we are seeing? We're seeing that price has created liquidity. So the next thing that we need to do is that we need to do this and watch price taking away all this liquidity that is resting above here, right? So we play again, and we see the market. Boom. Has it taken out? I think so, but not really much. But yeah, liquidity has been taken out. But let's just watch. Yeah, let's go. All right, guys, I'll pause it there. So let me see now exactly what is happening here. Was this a sweep of liquidity? Let me see. Okay, this is exactly a sweep of liquidity, right? Why? Of course, we're having like a double top, but in this scenario, I'll consider this as a sweep of liquidity. In a scenario whereby we've seen that the market has come and traded also above these areas like this and this. But on, I'm pretty sure on demo accounts, this is actually a week, all right? But since it's here, okay, just keep it like that. But this is a sweep of a market. Now, what we're going to consider is we're going to consider this area. We need to see price coming back, filling these gaps that actually led to the sweep, which is considered to be the sponsored candles. So now we just see that the market has just traded below this break of structure or change of market structure. So let's see how the market moves from there. See price is pushing down, pushing up. Let me see if price trades above. Yeah, exactly that. Okay, so guys, you can actually see that right now, price has actually tapped into my zone. Why? What should I do next after seeing price tapping in my zone? Next thing that I'm gonna do right now is to mark this high. I need to see price trading above this high. All right, so I need to see price breaking this low first. And once price breaks this low, that means I'm gonna be comfortable selling. Okay, so right now, I've seen the price now has traded above here, but before it traded above here, it actually created like some sort of another low, which means I'm gonna shift my area to this area. This is gonna be a change of character. I want to see price trading below this area. If the market trades below this area, that means I'm gonna now be looking for an area of mitigation where I should be entering my sells. So let's see. All right. So now the market has literally traded below, and now the market is right here, right? Is right here, where I'll consider this area as an area of mitigation. So the next thing that I'm gonna do is to sell right there, and I'm gonna sell, yeah, right there, and put my take profits. I don't know how to put a take profit. Okay, I'll take my profit, take profit, right there, and my stop loss will just be right there. So, and my order is going to be, yeah, hand one is okay. So let's see how this thing is gonna go. Okay, we're going down, we're going down, we're pushing down, and we're pushing down, we're pushing down. All right, guys, we just hit our TP right here. And you can actually see that there were so many areas where you could scale in. For example, right here, you could scale in, moving down. Okay, so like right here, there's so many areas where you could scale in, moving down. So guys, why am I showing you this? I'm just showing you this like a part of a strategy that I use when I'm trading. So right now, the market is literally there. The market is literally right here. What is this telling us? So this is simply telling us that if the market is down here and it has actually traded below these areas, which is our new break of structure, it's simply telling us that the market is likely to continue pushing downwards. But before the market push down, it's likely to come again in this area. The market is likely to come again in this area, whereby we see price pushing here, and as it continues going down. And this will actually make sense when you are one person who trades setups like trend lines, whereby I'll bring our trend line right there, and then we'll do this, and this will be like a latest. So maybe it might happen somewhere around there, or maybe it might just happen like quickly right there. But this is something that you guys need to be expecting to happen by the end of the week, or maybe if not by the end of the week, but it might literally happen. Yeah, it might literally happen by the end of the week, because we just need five more candles. So 5 more candles can literally show up and show us this. So why am I analyzing the DXY? What does this tell us? So the next thing that I'm gonna do is I'll take you on another pair which corresponds so well with what we are looking at. So I'll take you on GBPUSD, and I want to show you the connotation or the corresponding of how the correlation between these pairs. So this is the setup that you're seeing on DXY, and I need to remove everything on GBPUSD and also go on a daily, so that you can actually have a picture of what we're talking about. Okay, so this is on a daily, and this is also GBPUSD on a daily, right? Yeah. So as you can see, we are having an ascending, some sort of ascending, descending right here, whereby the market is literally pushing down, right? That is descending. But on this side, we're having something that is somehow ascending. What do I mean when I say ascending? Ascending is just simply a channel, like it's just a channel, and then we have like a sideways channel, a downward channel, an upward channel. So a downward channel is simply known as a descending, and upward channel is simply known as ascending. So this is simply telling us if the market continues going down, it means here, on the other hand, the market is likely to continue going up, right? Is likely to continue going up. But before it goes up, it's likely to push down a little bit. Like the market is likely to push down a little bit to come in this area, of which in this case, I think the market is likely to come in these areas, because these areas look like they are one of those untested areas where the market is likely to now start pushing to the upside. Okay, so why this like answers the question why I was looking at DXY, and why I'm also why I started looking at DXY, because DXY literally give us a very good picture of what is happening in the market and how the market is going to move. So that's exactly what we're talking about right now, and this is exactly what we need to do. So which means we don't have to bother like analyzing GBP/USD from XYZ all the way. Well, now we just know that this is what we're expecting on DXY. And now we just need to find those areas where the market might react. So the next thing is we go on gold, because also on gold, we're likely to have the same thing, whereby you can see we're also having an ascending type of thing, where, let me just delete everything. We're also having the same ascending type of thing, whereby we're likely to also experience the same things of seeing price continuously pushing to the upside, right? So right here, when I come here, we're likely to see something like that. Okay. So these are the things that we need to expect this coming week. It's either if the market is going to be slow, that means the market is going to end right here. But we should expect the market coming down and then continuing pushing to the upside. So right now, let me take DXY away. Now we need to just analyze these pairs individually. So I'll take you on GBP/USD first, so that we can actually analyze these markets together. So now we already know where the market is, where the market is going. We're in an ascending, we're in a descending, or we can say in a bullish run, whereby we need to expect the market constantly pushing to the upside. So what we need to do is, without going very far, we just have to identify the lowest low, which is one of the untested areas. And then another one is just this one. So these are just like our recent highs and recent lows. So probably seeing that the market also traded below some of the longest lows in 2023, should be June, July. And then right now, we're seeing the market is pushing to the upside, and it has just like traded above this area, and it has also traded above this area. So this is simply telling us that the market is constantly creating higher highs, right? Higher highs. So we can see that area was also broken up, and this area below was an area of liquidity, and we're seeing the market is pushing up. And because of that, we're also seeing another area of liquidity where the market pushed down to take out liquidity, and this is also telling me that, and we're also seeing this area has been balanced. I wasn't able to see this area from a very distance, but this area has been balanced. What I mean when I say balance is that you can see there was a gap, but this gap has now been filled. And the next thing is that I'm also seeing another gap right here, but fortunately, the same gap has also been filled. What does this tell us? So this is simply telling us that the market is likely to continue pushing to the upside, which means when we bring the not Fibonacci, but the trend lines, we're likely, okay, let's just start with the above. We're likely to have something like this, like when you do this, we're just connecting these two highs, and then we delete the first one, and then we duplicate it like that. So this is something that is likely to happen, like as I told you, whereby we're likely to see price dipping a little bit in these areas and then continuing going up. This is something that you guys need to expect. Why should you expect these things? Well, I'm seeing that there's a breaker broke right here. If you follow my videos, the breaker brokes are not something that I've done that is very new. But yeah, so this is like a demand area. And then we have another demand area. So demand area are more like discounted areas where price is offered to be bought at a cheaper price. Yeah, so this is something that we guys need to be prepared for the week. I want to go on a smaller time frame, but just know that as soon as the markets come in these areas, just be prepared to know exactly what to do. So if you are swing traders, you should probably know that the next week, as soon as the market gets in these areas, the next thing we need to do is to start buying. But don't buy as soon as the market is here, because it's gonna be crazy for you to find yourself buying in a space where the market hasn't really confirmed. But we need to see market trading above this area, which is something that I'm excited about. If you're enjoying this content, guys, consider hitting the like button, subscribe to my YouTube channel, and let me know what you think about some of the pairs that I'm going to be looking at, and also GBP/USD. So the next thing, we're going to be going on to gold. The last pair I'll analyze is going to be US30. So US30, of which is one of my favorite. So what we're going to do right here is also just come on on this area, which is the higher time frame, and we're gonna identify the highest area or the highest high, which is probably this area, and we're also gonna identify the lowest, which is probably this area. So in this scenario, we're seeing that the market actually traded above this area, which created a high, a higher high, and also price traded above this area, which also created a higher high. And apart from that, we are seeing that the market now is failed to trade above that area, like to give us a new high, right? And so during the market literally just came in and reversed. But as according to how I look at the market, this is simply just telling me that price is likely to come again in these areas, just to come retest in these areas. Why am I saying price is likely to retest in these areas? Because I'm seeing this area, some sort of area of support. Why? The reason is we're seeing this high right here that did not finish trading in this area. So just because of that, there's so much like liquidity above these areas where we see the price once came and then price reacted again, price reacted again, price reacted again, and also price came again. And it's giving us that clear signal that price is likely just to come and bounce in these areas, because price is already, if price, just know that if price reverses somewhere around here before it and then stays without taking out liquidity on the other side, just know that price has literally left a lot of liquidity above here. So it actually pushes down to go gain momentum and then just comes, take it all out, right? But it can just go up because it needs to come and swipe liquidity and also come and buy in these discounted areas. So that's something that you guys need to be prepared about, and we should consider buying in these areas in the, let's say when we use a Fibonacci from top to bottom. Yeah, so this is, we should be expected to see price coming into 70%, where we should be buying this thing and then we'll push it to the upside, which means you're not supposed to react anyhow before the market does its thing. You just have to be patient, wait for the market to present itself, or you can actually be selling from here coming down here. But what I can say is I wouldn't be comfortable selling in these areas just because I know that the market is going to come down here. What the reason is because even if I sell right here, I'm not sure where to put my stop loss. But if I'm buying here, I know where exactly where I'm putting my stop loss, which is something that is very cool. So because of that, I'm just going to also take a screenshot of this one and keep it for record. And if you're enjoying this content, please do hit the like button, subscribe button, and also drop a comment. Let me know what you think about this video, about this analysis, and about everything. So right now, let's go on the last pair, which is the US30, or yeah, the US30, Abambo US30, right? So US30 is one of my favorite instruments to trade. So what I'm gonna do right now is just also the same thing, same analysis, whereby we just notice that the market pushed up. I'm not gonna take much time here analyzing this one, but this one is self-explanatory. Why am I saying this? If you look at US30 and look at DXY, they just like move the same, which means the analysis is still gonna remain the same. So what I'm gonna show you is, yeah. So oops, let me put US30 this side, and then let me put DXY this side. All right, if you look at DXY right now, and then if you look at US30, they're all just the same. The next thing that we're waiting for right now on US30 is just to see price coming in these areas, you know, and then continue dropping. That's something that's very easy to say, because whatever is going to happen on DXY is also normally likely to happen on US30. So this is something that we should expect to see, and price might come down here, because in the first quarter of the year, I mean, in the first half of the year, the US companies, most US companies have closed because of they didn't perform so well. and blah blah blah, a lot of stuff. So we're likely to see the US30 like dropping so crazy. So this is just like the beginning. So let's see how everything is gonna go, and we're likely to see the market pushing down and then continuing going down, just like that. Otherwise, guys, this marks the end of the analysis. I'm pretty sure you have learned something, one or two. If you've really learned something, let me know what you think in the comment section. Tell me something. Like this video, subscribe to my YouTube channel, and let's meet in the next video. Otherwise, I'm wishing you all the best. Have a very productive week. Have a very productive week, a profitable week. Otherwise, I always say, guys, make sure that you put God first in your trading. Make sure you pray every single day before you open your charts, because God can make everything work out. Otherwise, guys, see you next time.